Okay, you're welcome. As we continue to look into our one model for Omfa. Now we'll be looking at counter trend, and we know what is counter trend. Let's try to make a counter trend recap. Let's try to remember how we understand counter trend. Counter trend is majorly used to trade against the trend in the lower time frame. Majorly our focus is to trade the trend back to the major time frame inducement. Okay, so like in the first one we studied about higher time frame inducement taken, then we want to use lower time frame our entry model to trade it with respect to the in regard to the higher time frame trend. But in this situation we are waiting, the price has not come to the higher time frame inducement. Price just after price caused a break of structure, then what we are expecting, price made this type of pullback and then give us an impulsive move and leave behind what this point as what as inducement. So this is on the higher time frame. This impulsive move that gave an inducement here in the higher time frame, by the time we go to the lower time frame we might see a type of structure like this. And we know in our counter trend trading we need to first of all have the first complete market structure. Then in the second attempt that price want to make a market structure, whereby price will not take this normally as an inducement for price to continue to trade upward. But no, what price will do when price is trying to take the second inducement is price took the second inducement, but this time around, that's on the lower time frame, this time around it will not be a change of character. Then we want price to make a pullback, after price make that pullback to take out this opposite or counter inducement. Then we want price to tap on any other block that is there, then we'll trade it downward until the higher time frame inducement. This is what we call counter trend to higher time frame inducement from the lower time frame. I hope this is understood. Normally that's how we trade it when it comes to counter trend trading, from lower time frame to the higher time frame inducement. But to make, how can we fit this type of trading method, this counter trend trading, how can we fit it into our Omfa model, which is into this our one model for all, where we have supply turn to demand, then demand turn to supply, S2D or D2S. So that is what I want to learn from here. Let's check this. But tutorial will come to this other side. The same thing, price has given us this type of market structure in the higher time frame. Then this impulsive leg, we want to see what is happening in the lower time frame. If price give us first of all our first market structure that failed, then the second market structure that price is going to give, if price give us something like this, an inducement, the first one, that is number one, is a complete market structure. Okay, so price give us an inducement, give us, then after that price give us a decisional order block. You can see when price tap on a decisional order block, price make a pullback, pull back from the decisional order block and then fade it. So after price fade the decisional order block, what do we expect price to do again? Price went up to take out that point that reacted from the decisional order block. After price take out that point, then if there's another block here, price tap on that other block, which is now serving as our demand to supply, because demand fade, then supply take over. With this we cannot trade this with respect to our model, either to this lower time frame low point, or we can extend it to this higher time frame inducement to make the counter trend trade complete. Okay, but if we want to play it safe, we can say okay, because price can get to this lower time frame low point after taking it out, it's a winning trade, then price can make another type of entry reversal from here to go and continue to and continue with the original trend without taking out the higher time frame inducement. Okay, I had to make that correction it is higher time frame inducement, HTF, not HHT. So this is higher time frame inducement. Price can get to that point, but if I want to play this safe, we can just say, okay, let's use the lower time frame low point as our target point after we enter this trade. That is how we do it. So I'm going to show an example how we can use this our entry model on counter trend trading to higher time frame inducement or even the lower time frame point of interest. Okay. Okay, as we can see here, we have this crypto known as ARO USDT.P. The market saw that this type of crypto gives was that after price takeout inducement, there was break of structure there. After that, price caused another thing called change of character. After that change of character, there was a valid pullback here. Let me zoom it in. You see this point, there was a valid pullback. Price came, took out the inducement and formed a break of structure. After that break of structure, what do we want price to do again? For this low point to be confirmed as a low, we want price to form another inducement. Okay, then this will be considered as a low. Then when price come, this point will be considered as inducement. Then this point now, this low point will be considered as a low. But in this scenario where price did not form another inducement, this low point that is supposed to be low will now be considered as our new inducement. What do we do from this? We will have to switch to the lower time frame, corresponding lower time frame, which is 1 hour, and see if we will get our entry model in this type of trade. So what happened here is this. You can see that after the daily time frame break of structure, this point, this is what just happened. Then we want to look for our counter trend trade. So our counter trend trade, if you look at this point, all this leg here, there's no point that swept liquidity, that swept inducement. See what price just did. Price just ignored that counter trend pattern of, first of all, having one market structure, then another point of pullback will be considered as what? As change of character. But what price just did there was price gave inducement. After inducement was taken, you can see this is now what? Our decision order block. After price gave decision order block, price came, tap on it, react. After reacting, you can see what just happened. Price failed it. After price failed this reaction point, what do we want price to do next? In as much crypto is concerned, even if you put your entry in this point, maybe you want to say, okay, this is another block, right? If you check it very well, let me zoom in. Okay, this other block is not even valid, because we can see from our usual way of trading, looking for our other block. This other block engulfs everything, so the high point is protected, the low point is also protected, which is not supposed to be so. So there's no other block there. So what price normally do, especially when it comes to crypto, using this method of trading, price will just take out the last pullback before the low. This is the high point, right? Then price will take out this last point, since there's no valid other block in all of these legs. So everything will be considered as what? As just price trying to take out people's money, liquidity. Everything here will be considered as liquidity. So the last point of interest before the main low point or high point, this is the high point, right? Then this last pullback, price usually will come for it in the situation whereby there's no other block. Even when there's other block, sometimes after putting your entry at that other block, always put your stop and your risk management stop loss at the last pullback at that high point, in the scenario of selling, or at the low point in the scenario of buying. So we'll see what happened there. So what do we expect price to do? We expect price to what? To come into the decisional. After taking out the decisional order block, we want price to take out this high point. Then that would not be considered as our demand to supply. You see what price just did? Price came, take out that May point, and then it was a boom trade, even without any other block at the top. Even when there's no other block at this particular point, there's no valid other block here, but price had just taken that last point as liquidity point of interest, and then view the trade was a successful one, and you can see it. This is what? This is 6.79 trade. Okay, so there are sometimes the criteria for counter trend, whereby we have one structure and then the second structure that I want to form is now going to be our point of entry. Sometimes that may not occur, but our major focus is that our structure is given, because in the lower time frame, this was a perfect market structure, break of structure. This is a perfect low point, and every other thing here just pull back, pull back, pull back. All these were the pullback we did not see in the higher time frame, but in the lower time frame, the 1 hour time frame, we can see everything is completed. So this is a valid low point and this is a valid high point. Then price take out inducement, price tap condition order block, reacted from it, gave all this type of movement, and then we expect price to come back, take out the last pullback before the May high point. After price took that out, to put our stop loss at that May high point, then we'll put our target at the daily time frame inducement, which is our higher time frame inducement. So these are many other examples. This is just how the market structure, it's just how our entry model works when it comes to trading counter trend. Let me see if I can find another example. Okay, this is another example we can take a look into. This is Theta USDT.P futures pair to trade in the crypto market. We see that this is a bullish market already. We have inducements, break of structure, low is confirmed because we now have another inducement here. And with this, we want to see how price can cause a change. What can happen in the lower time frame, since we want to counter trend it, but we want to use our entry model for it, our one model for all, either demand to supply or supply to demand. So let's see what happens here. You see, this one meets our counter trend criteria. First of all, there's a break of structure, number one. That's why I wrote there, number one, break of structure. Then we want to see what price will do. What price did after that. See, price made a pullback to this inducement, 1 hour inducement. Then we now have our additional order block. You can see what price did. Price came into additional order block, react. After price react, then it failed the additional order block, thereby leaving this point here. So when price leave that high point, even when you look at all this top here, there's no valid order block. But price sometimes does not give a damn about another block, whether there's other block there or not. All price wants is liquidity inducement, taking the money. Okay, so we can now see that after this pullback from the duration order block that now failed the duration order block, we want price to do what? To go back and take out that high point that failed the duration order block. But when we want to put our stop loss, we are going to put the stop loss above this high point. You can see, so this is the entry target, then the stop loss we put at that point. Then the target in this time around, it can be put on the first market structure that failed. This number one structure, it can be our target point of entry. But although the usual way of trading counter trend is to trade it from the lower time frame to the higher time frame inducement. So we can also put our targets at what? At the daily inducement. You see what price just did after filling this additional order block. Price came back, swept that high as liquidity sweep, and then boom, price came into the 1 hour with the lower time frame low point. After taking it out, you can see what price just did again. Price was added to the day inducement, the higher time frame inducement, which was the original target of trading counter trend. I hope you can get it. So if counter trend might be too difficult for you to get along with this type of structure, when the first structure failed, number one, then number two then happened, and we have a additional order block. We have inducement that was taken. After inducement taken, then we now have additional order block. All that has met our criteria. What is remaining is to trade it with confidence and let it play out. I hope this is helpful to everyone. Practice, 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 and I wish you the best of luck. Have a great time.